Hello friends, welcome to the course on Accounting and Financial Management for Bankers. See, in this session, we will start with Unit 1, Definition, Scope and Accounting Standard including the INDIS. What is learning objective? So this video will enable to learn accounting, the definition, purpose and the characteristics of accounting, bookkeeping versus accounting, the type of accounting, mainly the stewardship accounting, financial accounting, cost accounting, management accounting, social responsibility accounting, inflation accounting, etc. Comparison table for various type of accounting, what is the history and the origin of accounting, then a new accounting system, for example the value accounting, fair value accounting, and some sample question we will see. Let's start with the introduction part. Now see, accounting is the often called as the language of business. So what is accounting? Basically accounting is simply the language of business. So we have languages like English. It is what? It is the language for communication, right? In the same way, to communicate the financial result, we have accounting. So what is accounting? In simple way, in layman's term, I will say accounting is the language of business. It is the language of business. So to communicate the business result, to communicate the business health, we will use the accounting, right? For example, if I say my business has earned a 5 lakh rupees of profit in the previous year, that means what? I am able to communicate the financial result of my business. That's why I can say it is the language of business. So the purpose of accounting is to communicate or report the result of a business operation and the financial health of the organization. So what is the purpose? Simply to communicate what? To communicate the business operation and the financial health of the organization. So very simple. If we have to give the loan to the customer, we will ask him the balance sheet, profit or loss statement, right, and different ITRs. So based on that, we are able to get what is the financial health of that enterprises or the customer. So based on that, we are offering them the loans, right? So what I have to say, simply accounting is simply used to communicate the financial health of the organization, enterprises or the business operation of that particular enterprises. Now see, definition of the accounting. So definition by American Institute of a certified public accountant, AICPA. So the definition given in 1961 by American Institute of Certified Public Accountant, AICPA. So accounting is an art of recording, classifying, summarizing in a significant manner in terms of money the transaction and event which are in part that list of a financial character and interpreting the result thereof. So what do you mean by accounting? So the definition given by the American Institute of a Certified Public Accountant, AICPA, in 1961, they says that accounting is simply recording, classifying, summarizing and interpreting the result is nothing but the accounting. What is accounting? In simply the recording of the transaction, right? What is transaction? For example, any business has purchased some goods, right? It is the recording and we have noted it into the book of account. It is the recording. So simply recording, classifying, I say recording, classifying, summarizing and interpreting, these are the steps involved into the accounting. So record the transaction, classify the transaction, summarize the transaction and interpret the transaction is simply the accounting. So very simple. What is accounting? If anybody says to you, what do you mean by accounting? Simply we have to what? We have to record the transaction, then we have to classify it, we have to summarize and we can interpret the result of the transaction is what the accounting. For example, I simply say, see, recording means what? Simply writing the transaction into book of account. For example, you are having the ledger or the notebook, simply you are having, you are recording. For example, you have purchased, you are the stationery shop owner, you have purchased the pen for say 100 rupees and you have sold the pencils, say you have sold the pencil for say 50 rupees. You have written down that into the book of account means what? You have recorded it, right? Writing the transaction into the book of account is simply the recording of the transaction. Now say, what is the classifying? You classify it. You classified it what? For example, the pen you have purchased. So these are the purchase transaction and you have sold the pencils, right? So this is the sale transaction. So you classify purchase and sell in different category. So we can say it is a classification. Summarizing means what? You will summarize. For example, I have sold the pen of 100 rupees. I have purchased the pen for 100 rupees and I have sold pencil for say 50 rupees, right? I have purchased, suppose I have purchased the pen for 100 rupees and I sold the pencil for 50 rupees. So what is my net cash flow? Net cash flow is minus 50 because I have more purchased. So this is what the summary of the transaction, that minus 50 is my net cash flow. Now, how what I can interpret? I can interpret that in today's transaction, my business is negative. So this is what the very basic thing. So recording, classifying, summarizing and interpreting, these are the steps involved into the accounting. Okay, so recording of the transaction, classifying, summarizing and interpreting, this is basically the accounting, right? Very important. In terms of money, what do you mean by in terms of money? Means what? Accounting only record the transaction which are where money is involved. For example, if you went to any garden, you like there the greenery, you like the in the garden there was one person who is selling something, right? And you like that very much, so you cannot record that I like the garden. You cannot record into the book of account that I like the garden. But however, you went there and you have purchased something from that, right? For example, you purchased 50 rupees you spent there for buying the, say, the sandwich you have purchased there. So that you can mention into the book of account. Meaningly, only the transaction which in terms of money can be recorded, classified or summarized in the accounting. So we talk only in terms of money in case of accounting. The transaction and event which are in part at least of a financial character. Obviously, in terms of money or only the financial transaction we are doing into the accounting, right? So very simple. What is accounting? Recording, classifying, summarizing and interpreting the transaction is the thing what the accounting. Now see, accountancy involve following steps simply: systematic classification of a business transaction, recording of a transaction in book of account called as the bookkeeping. What is bookkeeping? Bookkeeping is simply, see, first step involved is what? The recording of the transaction. You record the transaction and record the transaction in the thing but the bookkeeping. Very simple. Remember, bookkeeping is what? If anybody asks you what is bookkeeping, bookkeeping is nothing, simply the recording of the transaction. See, previously there was no software, so the manually you have to enter the data into the ledgers, right? That entry into the ledger is nothing called as the bookkeeping. Then accountant will verify and do summary of it. It is called as the accounting. Accountant job and bookkeeper's job previously were very different. Nowadays, there are a lot of softwares available. For example, Tally, right? So Tally software do all the thing. Software itself doing the classification of transaction, recording, summarizing. So software is doing all the job of both bookkeeper and the accountant, right? So in simple way, I tell you, only remember the bookkeeping is what? Simply recording of transaction is nothing but the bookkeeping. First step, okay. So what are the steps involved? I repeat: classification, recording, summarizing and the interpreting. These are the steps involved. So summarizing the recorded transaction, that is what? The preparation of a trial balance, the preparation of a balance sheet and the profit and loss statement. This is what? The summarizing the transaction. Then interpreting the financial transaction from the recorded data and the financial statement. So you can interpret. Okay, very simply see. Classification means what? For example, you have the stationery shop. You have purchased some material and you have sold some material. So you classify what item you have purchased and what item you have sold. So this is simply the classification. Recording means what? You have recorded into the book of account how much amount you have spent for purchasing, how much you have spent for you earn by the selling, right? So and summary means what? Netting, doing the netting. For example, you purchased for 100 rupees and you sold for 200 rupees. So summary, you can say you have positive 100 rupees at the end of the day. So summarizing, it is also involved the preparation of a trial balance, the preparation of a balance sheet and the profit and loss account statement. Okay, summarizing involved the preparation of a financial statements. Interpreting the financial transaction from recorded data of the financial statement. So based on that, you can say today I have earned the 100 rupees. So it is what you can interpret it. So very simple. I repeat, the accountancy involved classification, recording, summarizing and the interpreting. These are the steps involved in the accountancy. And an important thing you would remember that the bookkeeping is nothing but the recording of the transaction. Now what do you mean by bookkeeping in detail? See, Recording of an event or the transaction in the book of account on a daily basis is nothing but the bookkeeping. So I also already told you that. What do you mean by bookkeeping? Bookkeeping is what simply recording of the transaction on daily basis into the ledger in the book of account is called as the bookkeeping. Recording of the business transaction in the book of original entry and in the ledger. Bookkeeping and the accountancy, these are two different things. However, we can say accountancy is wider concept than the bookkeeping. So what I say, bookkeeping is a part of accountancy. Remember, these are the two different things. However, they are very much related. So I can say bookkeeping is a small part of accountancy, because accountancy is very big concept and bookkeeping is only very small concept, means only doing the entry. Okay, for example, what the clerk do in the bank, they do the entry level work, but only doing the entry of the financial transaction is the work of bank. No, bank has very huge work. For example, bank is also working into the different field like retail loan, wholesale loan, housing loan, right? These are different parts, right? So doing only entry is not a part of the bank job, right? So what I say, the bookkeeping is simply like a clerical work, and accountancy is a very broader work done by the accountant. Okay, we will see the difference also. Now see here, bookkeeping versus accounting. So what is a scope? Based on the scope, I can say that bookkeeping has a narrow scope and it is a part of accounting, and it limits up to the recording of the transaction. What is the bookkeeping? Simply it is a recording of the transaction. What is accounting? Accounting is the broader term that include the bookkeeping as well. Means what? Bookkeeping is a part of accounting. Decision making. So data provided by the bookkeeping does not help into the decision making. However, decision making can be done using the information present into the accounting. For example, different financial statement we get at the end of the accounting, right? So when we do the accounting, we are getting the financial statement. For example, profit and loss statement and balance sheet. So based on that, you can make decision, right? However, using only the data entry, that is what the bookkeeping, you are not able to make the proper decision. So what I can say, bookkeeping not allow you to take proper decision. However, accounting allows you to take the proper decision, because we are preparing the financial statement into the accounting. Now financial statement, the process of bookkeeping does not involve the preparation of the financial statement. Only it provides the data, because it is simply data entry. However, in accounting, in the process of summarizing, we prepare the financial statement which are useful for decision making. Now skills and knowledge. So obviously bookkeeping is a entry level work, so does not require special skill. For example, because it is like a clerical work, and the work done of a bookkeeping done by the clerk, generally called as the bookkeeper. So accountancy is what? Accounting is specially requires some skills, right? Some knowledge, and so we can say it is a professional task, and that done by the accountant. Okay, so very simply, bookkeeping is a clerical work called as the bookkeeper, done by the bookkeeper. However, accounting require the professional knowledge, and they are done by the accountant. Okay, so these are the very important basic difference you should understand. One thing you remember, one only basic thing, what? Bookkeeping is a part of accounting. So you can say accounting is a bigger concept than the bookkeeping. Okay, now see the characteristics or the features of the accounting. The art of recording, classifying and summarizing the transaction is called simply the accounting, right? So accounting record transaction only in terms of money. I have already told you, only in terms of money means what? You went to the garden, you like that garden very much, you cannot record that entry into the book of account. However, you went there and you purchased something in that garden. For example, you purchased a sandwich there, right? For 50 rupees, you have to note it into the book of account. Okay, means what? Only the money transaction in terms of money are allowed to record. Accounting record the transaction which are only financial in nature, right? Only financial transaction are able to record. For example, whether it is not involved any cash transaction. However, the financial transaction means what? You have given some money to the colleague or your friend as a loan, right? It is what? The financial transaction which you have to enter into the accounting. Accounting also interpret the financial data and the transaction, because based on the interpretation you are able to take the decision, right? So what are the characteristics? Simply, accounting is only financial in nature. It involves the transaction only in terms of money, not the feelings, right? It is useful for interpreting the data. Okay, now what is the purpose or the objective of accounting? Simply to keep a systematic record. So obviously, whatever, see, you are using software to do the accounting, so it prepare very well ledger, how much sold, what items sold, right? For example, passbook you printing there, you are printing simply, you see, you are printing the passbook. So how finely and neatly it divide the entry, the credit, debit, and total balance remaining, right? So in that way, you can say systematic record is preserved using the accounting. To ascertain the result of an operation, that is what? To know the profit or loss during the particular period. For example, what I have earned or lost in the previous quarter. So result of operation can be done using the accounting. To ascertain the financial position of the business, availability of the cash, asset and liability, the balance sheet of an organization reveal its financial aid. So using accounting, you prepare what is your asset and liability, the balance sheet of an organization, profit and loss statement. So based on that, you are able to get the financial health of the organization. Then to facilitate the decision making, so obviously using accounting, you will get the sufficient financial uh, document, for example balance sheet, asset liability statement. Based on that, you are able to take a proper decision. So we can say decision making will be easy using the accounting. To satisfy the requirement of law, so the maintenance of account is compulsory under the Sales Tax Act and the Income Tax Act. So we can say it is also mandatory to follow the accounting. So why we are following accounting? Simply the systemic record is prepared to maintain, to ascertain, to get the result of operation, whether business is profitable or not, to get the financial position of the business, and to make the decision making, and it is mandatory as per the law. So these are the reason, that's why we are following the accounting. Okay, now what are the purposes? Simply say it gives the scientific and systemic record of a transaction to extract the result of operation of a specific period. For example, if I have to know in a previous 1 month what is my position of business, whether I earned or lost, to arrive at the end of ascertain the financial status of the enterprise, whether my company is running good or not, whether should I continue that or close it down, to facilitate the different decision making. Should I purchase more, should I sell more, should I hold? So that decision can be done, the decision making can be done using the accountancy. To adhere the statutory requirements, so to follow the law requirement. Okay, so these are the purpose and the objective. Now see, simple question, which of the following is an example of a financial statement? First, balance sheet and the relevant schedule, profit and loss account and the relevant schedule, cash flow statement, all of the above. So correct option is D, all of the above. So these all are the financial statement. If I say what is the financial statement? So financial statement is simply the document prepared analyzing, interpreting the different financial transaction is simply the financial statement. Okay, for example, the balance sheet we are preparing the profit and loss, we are preparing the cash flow. So these are the major 3 financial statement. Okay, now accounting summarizes the data, record the transaction in the book of account, and present in a systemic manner in the form of dash, trial balance, profit and loss account, and balance sheet. So correct option is again D. So using accountancy, we record the transaction, we summarize it, and we will present it in the form of either trial balance we can prepare profit and loss account, we can prepare the balance sheet. So basically financial statements we can prepare using the accounting. Now see, history or evolution of accounting. First is the stewardship accounting. What do you mean by stewardship? Stewardship means simply we are appointing one employee to take care of our property. Okay, so in the Middle Ages, the wealthy people appoint the stewards. In the Middle Ages, wealthy people appointed the stewards. Stewards means simply the employee who will take care of their property, to manage their property. So stewards are appointed by the wealthy people to manage their property. These stewards would keep an account of all the business transaction pertaining to the property of the owner. So what they are doing, they will maintain the record, how much property they are having, right? So stewards periodically give the detail of transaction to the owner. So they will give their owner the detail periodically, for example, monthly, twice a monthly, that how much property we are having, how much we have earned, how much we have lost. So this kind of accounting, where the manager of the business provide a report to the owner of a business, is called as the stewardship accounting. So I repeat, what is stewardship? Simply there will be the one manager who is providing the report of the business to the owner. It is called as the stewardship accounting. So in the 15th century, Italian merchant developed the method known as the double entry bookkeeping. It is also very, very important for exam point of view. The double entry system is originated where? In Italy. In Italy, the double entry. What do you mean by double entry? That all we have to discuss in detail. For example, for one transaction, we are having two entries, like one credit and debit, right? In simply, if a customer of you are in a cashier, customers deposit the cash in your account. What you do? You will credit that cash into the customer's account automatically. It will be debited into the bank's account. So it's called double entry system. Okay, that we will see in detail. So here, but important thing, double entry system originated into the Italy. In the 19th century, the Italian method was adopted across the Europe. Now we are following the same double entry system. So what is the key point here? In stewardship accounting, it gives rise to the double entry bookkeeping, that is mainly in Italy. Okay, very, very important. Stewardship accounting give rise to the double entry bookkeeping system, and that is originated into the Italy. Very important. Now, what is financial accounting? See, financial accounting means simply what we are following today. Okay, financial accounting originated with the rise of a joint stock company. What do you mean by joint stock company? See, company become large, then they will apply for the IPO, right? And they will sell their shares to the public. So public will purchase the share. For example, you purchase the Tata Motors share, you purchase the Mahindra share, you purchase the Ola Electric share. So why you are purchasing that? So to earn the dividend, to earn the profit, right? So obviously, when you purchase the share, you will see, right? For example, whether company is profitable or not, right? Whether how much is the sale doing company, whether Tata Motors is doing good in electric or not, whether Mahindra is doing good in electric or not. So that means you will see the financial report of that company, and based on that, you will make decision to purchase the share of Tata Motors, Mahindra, or Ola Electric. So based on the financial data, you will look into it and you will like it, then only you will able to purchase it. That means what? You will get insight of the company. That is what the financial insight, then you are able to purchase, right? Simply, these companies were formed by numerous individuals investing in the share. So in the share market, we will purchase the share, right? And based on that, so shareholder require insight into the company's financial performance. This need lead to the development of financial accounting practices. So very simple. For example, Tata Motors is listed into the stock exchange, right? And you have to purchase the share of Tata Motors. But if you don't know anything about the Tata Motors, what is their quarterly result, whether they are making profit or loss, right? How much units they are selling per month. So if you know that all the data, then you will encourage to buy the shares of a Tata Motors. Means what? You require the insight about the company, and that requirement of a insight give rise to the financial accounting. Information was provided to the shareholder through the financial statement, like a balance sheet, profit and loss account. So if you have to invest in any company, what you will see? You will see earning per share of that company. What are the financial statement? For example, balance sheet of that company, profit and loss account statement of that company, and based on that, you will purchase the share, right? So these are mainly used by the bank, the investor to invest into the stock market, the tax authority to check the financial health of the organization, okay, or the company. So very simple. What is the financial accounting? See, one word you have to remember here. Financial accounting involve preparation of the financial statement, like a balance sheet, profit and loss account. Okay, so one thing you remember, for example, point of view, what? That the joint stock company, the financial accounting mainly originated with the joint stock company. So the stock exchanges basically give rise to the financial accounting to know the insight of the company. Okay, what are the advantages of the financial accounting then? Simply, it provides information which is useful for making the economic decision, like investment should be done or not. It serves user who depend on the financial statement, like a balance sheet, profit and loss account, for information about an enterprise's economic activity. It also provides the information which is useful to the investor and the creditor, like a bank, for predicting the and comparing, evaluating cash flow in terms of amount, timing and uncertainty. So basically, it provides information to the creditors, like a bank, and the investor who want to purchase or invest into the shares. It offers also insight for the predicting, comparing, evaluating the earning power of enterprises. So if you have the financial statement, for example, you have the balance sheet of the Tata Motors, you are able to evaluate and compare how whether the Tata Motors will earn in the future or not. So based on that, you can compare, evaluate, and you can invest. So to supply information useful in judging and the management's ability in utilizing the enterprise resource effectively. Means what? See, based on the financial information, you are able to judge the management of that company whether they are utilizing the resources effectively or not. It discloses the basic underlying assumption related to the interpretation, evaluation, prediction, and the estimation. Means what? What are the basic underlying assumption that will be disclosed? Means what? See, if you have the balance sheet, financial statement of particular company, you will get anything, right? So it also help to compare company performance with the industry peers. Means what? How Tata Motors is doing versus how Mahindra and Mahindra is doing. So you can able to compare based on the data you're having. So that all is available due to the financial accounting. Okay. So basically financial accounting involve the preparation of financial statement, and based on that financial statement you are able to take the decision. You means anything, for example, either investor, either the bank, right? Next, what is the cost accounting? See, we have to see in detail about the cost accounting, right? So, but see here how it has been originated. During the industrial revolution in the England, there was a need to develop the accounting as a tool of industrial management. So in England, you are very much aware, around 1920 the industrial revolution happened, and that give rise to, see, more industry developed, more money is coming, selling and purchase more is there happening. That's why there was need a accounting tool to manage the big transaction. So there was increase in use of a costing technique. So recording and the tracking of the cost increased. So see, more industry, that's why that give rise to the how we can cut the cost and how can we maximize the profit. So they have recorded how much raw material we are purchasing, how much manpower we are having, and how much we are earning the profit. That all has been recorded in that era. So the cost accounting involve systematic application of a costing method. For example, to control the cost inside the business. So very simple. What is the cost accounting? Cost accounting means simply it involves we have to apply such the method or application in such a way that we have to control the cost. So it control the expenses and improve the efficiency of the business. It is used by the factory and the manufacturing companies mainly. For example, see through example, an EV car manufacturer company want to know the cost of making one EV car. That is how much raw material is required, labor requirement, electricity, etc. So if it is too high to make the one car, the company will find another way to reduce the cost by changing the production method or reducing the waste, right? So what do you mean by it? Simply, cost accounting is mainly focusing on what? Reducing the cost of required. Means what? Cost cutting and improving the efficiency is the main objective of cost accounting, right? So key point is here, the cost accounting help in the businesses to cut the cost and increase the profit. So to cut the cost and increase the profit, we are using the cost accounting. What is the ultimate aim of cost accounting? Cut the cost and increase the profit. Okay, now management accounting. See, management accounting involve preparation and a presentation of accounting information. That is what MIS. MIS means what? The management information system. For a management to take the decision, for example, you are providing them a chart. You are providing a management a chart that how much business we are having per branch, right? And in that branch, how much staff is there. So based on that chart, we have prepared the data we have provided to the management. Management can make a decision how much we can do, what we can do there to improve the business, right? So very simply, we are providing the data to the management to take the decision. It's called management accounting. So the management accounting information is meant only for the internal use by the management, and it is not disclosed to the public, right? So but the important thing is, you have to remember that the management accounting information, right, whatever we prepare MIS under the management accounting, that is not to the public. It is only for the management to take the decision. Management accounting isn't bound by the same rule as a financial accounting because it is only for internal purpose. So you don't need to follow the financial accounting rules. It uses MIS. What is MIS? Management Information System. For example, preparation of a budget, forecasting, and the performance and the report, etc. Right? So preparing the report, preparing the budget, these all are the part of management accounting. For example, see, a restaurant owner note that sale is more on the weekend. So he decided to hire the additional staff for the weekend to handle the rush in the weekends. So this choice is based on the management accounting, which uses their internal data to make the smarter decision. right? Through example, you are able to get the management accounting very easily. So what is the key point? Management accounting is for internal business decision only, okay, not for the public. Next, social responsibility accounting, very easy. See, this accounting takes into consideration the impact of a business decision on social factors also. For example, environment, ecology, well-being of the people, etc. So the traditional accounting take into account only the balance sheet and the income statement, but the social responsibility accounting goes beyond it. What do you mean by it? Simply, see, for example, if you are installing one factory, right, and that factory is earning you very much, you are earning very good using that factory, but ultimately that factory is doing the water pollution in that area. So the people living in that area, they are suffering from of a different diseases. So whether only earning the profit is your objective and making harm to the environment and people living there, right? So here is the concept of social responsibility accounting. You are not only thinking about the profit you are making, you have to also think about the people they are living, environment there, how they are impacting their social life, right? Like ecology, their well-being of the people, environment. So if you are considering that, if you are maintaining the balance, you are following the social responsibility accounting. Okay. So what is the key point here? Simply, social responsibility accounting consider the impact of a business decision on social factors. Okay, now is the HR accounting, human resource accounting. So this method was mainly developed by the Hermanson in 1964. Very, very important. For example, if you remember Hermanson. So human resource accounting can be defined as the process of identifying and measuring the data about human resource and communicating this information to the interested party. So we will identify how much clerical staff is required, how much officers are required, right? How much we are currently having, and if we hire that, how much our business will increase. So if that data we are having, we are following the human resource accounting. Very simple. So in simple word, HRA, human resource accounting, involve the accounting for investment in the people and replacement cost and economic value of the people to the organization, right? Very simple. See, for example, I have in my bank, I have to appoint the home loan head for my bank, home loan, that will only look for the home loan, okay? And if I appoint one person and he is taking, for example, 5 CRs of the salary per annually, he are taking the 5 CR as a salary annually, right? So whether appointing that one person or 5 CR, whether it is profitable for me or not, it is good for my company or not, right? So that is a part of a human resource accounting. So economic value of the people to the organization is established using the human resource accounting. So what is key point? Simply, this accounting report and emphasizes the importance of a human resource. So importance of a human resource, the employee in the organization are reported. This accounting mainly report and emphasizes what is important, right? Why employees are important to the organization, that is basically given by the human resource accounting. So key point is simply this accounting report and emphasizes the importance of human resources. Now inflation accounting. What do you mean by inflation? For example, see, inflation means what? General rise into the prices. For example, 1 kg of the rice I am able to purchase for 100 rupees today, right? Say in 2025. In 2030, I will able to purchase 1 kg of rice in 150 rupees. So increase in what? The 50 rupees per kg. It is what? Inflation. Amount is same, 1 kg, 1 kg. Still we have to pay more. That means what? Inflation. So this type of accounting concern with the adjustment in the value of asset and profit in case of changes into the price level during the inflation. For example, I have made the one balance sheet, right? For example, asset liability statement I have prepared, right? And I am having asset in my company, and that I have valued for say 50,000. So due to the inflation, the price has been increased to 55,000. So that additional 5,000 should be entered into the book of account. That is being done using the inflation accounting, right? So whatever means what, simply adjustment is being done either in the form of asset or the profit in case of change into the price level, that is inflation. So if a profit is being overstated during the inflation, it is corrected through the inflation accounting. So you have given the profit, right? But that increase in the profit is mainly due to the inflation. For example, you sold 100 umbrella previously and you have earned the 1,000. In the next year, you sold the again 100 umbrella and you have earned the 1500, because here price is say 10 rupees and here price is 150 rupees, right? So here increase in price, you have not increased the number of items you have sold. Your number of items sold is same, still you are earning more profit. Why? Because increase in the prices, this is all due to the inflation. That can be corrected using the inflation accounting. Okay, so what is key point? Accounting, this inflation accounting consider the rising price during the inflation and adjust the value of asset and the profit. Now, new accounting system we will see. What do you mean by the value accounting? Value accounting. See, a profit is a result of the various individual contribution. So, whether see, product is the result of various individual contribution. So, if any company is making something, for example, they are making the Ola Electric, right? Where only one person is employed there, lot of workers are working to make one electric vehicle. One, some are making the wheels, some are making the engine, some are making the electronic part, like that. Okay, so we can say product is the result of a various individual contribution. So the value accounting is used to evaluate and capture the individual contribution, whether this contribution is a tangible or intangible, and it is normally mentioned as a percentage of each contributor. For example, you will get, see, if 5 workers are picking the tea leaves and putting these into the same basket, the contribution of each tracked through the value accounting system. Means what? For example, see, there are 5 workers, they are picking the tea leaf and they are putting in the basket, right? So, and when we sell it into the market, so for example, how we will distribute, for example, 100 rupees we have earned. So, how that we should distribute into the 5%, for example, 5%, 10%, 25%, 35%, like that. Okay, that means what? Individual contribution is taken into account simply into the value accounting, right? So, what is key point? This is helpful for deciding the individual contribution. Only one word you have to remember with respect to the value accounting. What? It is the individual contribution. Okay, now what is a fair value accounting then? It is also called as the current value accounting. See, fair value, for example, if you went into market, you are purchasing something and it is saying that 1 cup of tea is available for 200 rupees. So you will say, oh, it is very high. You just offer me the fair value. Okay, 20 rupees is sufficient for 1 cup of tea. That is what? The fair value accounting, right? It is also called the current value accounting. So it takes into account the current market value of a certain asset and liability. Market approach, income approach, and the cost approach, these are commonly used in this matter. See, what is a market approach, income approach, cost approach, that we have seen in detail, right? We have to solve the problems also. But here only remember, for instance only, just go through it. Market approach, the income approach, and the cost approach, these are used into the fair value accounting. This accounting does not have a wider acceptance due to the issue like increased cost, delay, the non-availability of the reliable information, and the doubt about the accuracy of the available information. That's why the fair value accounting is not widely accepted. Okay, only one thing you remember. Fair value accounting is also called the current value accounting because it uses the current price of the product or the asset liability. Okay, current price, simply it is based on the current price. Only one thing you remember. It is not widely accepted. Okay, now see the comparison of different types of accounting. The financial accounting, cost accounting, and the management accounting. See who uses it. So financial accounting is obviously used by the bank, government, or the investor. That is what the financial statements are prepared and judged to make the decision. Cost accounting used by the company and the factory to minimize the cost, right? Management accounting is generally used by the business owner, enterprise owner. What is the purpose of financial accounting? It shows the financial health of the organization. What is the purpose of cost accounting? To control the cost, so cost cutting and increasing the profit. What is the purpose of management accounting? It helps into the making the decision. See, financial accounting example. Bank is checking the loan eligibility of the customer. So bank will check for the CIBIL. Bank will go for the financial statement of that particular company or the enterprises to give the loan, right? Example for cost accounting is that the car company reducing the manufacturing cost is cost cutting. An example for the management accounting is simply a restaurant hiring more staff on weekends to manage the rush is the management accounting. Okay, very easy. Now see history and the origin of accounting principle. Just go through it. For example, because in exam they can ask you one-liner question. Modern accounting system have their origin in Italy, which we have just see in the beginning itself. Double entry system was first described into the Summa, published by the Italian monk Luca di Barco Pescioli, also called as the father of accounting. Okay, it is very, very important for exam point of view. Luca di Barco has the Luca di Barco, also called as the father of accounting, who has given the double entry system first described. Okay, so Luca di Barco has developed the double entry system, and he has described it into the his book Summa. Is right. So always remember Luca di Bargo, also called the father of accounting. Okay, so remember 2 points here. Double entry system first described in the book Summa, written by Luca di Bargo. Kautilya's Arthashastra also describe few concepts about the accountancy. Right, Kautilya's Arthashastra describe the few concepts about accountancy. In India, old method of accounting called as the Namma, it is still in use. It is also called as the Mahajani, Marwari and the Deshi methods. Nama is also called as the Mahajani, Marwari and the Deshi. Okay, so only one thing you remember here, because it is very, very important. Current accounting system, whatever we are following now, it is mainly originated into the Italy, and the double entry system also originated into the Italy, because it is Italy given by Italian monk Luca di Bargo. Now see through example, through some question. The stewardship accounting was first originated in which country? England, USA, Italy or Canada? So it is originated into the Italy, right? So option C is the correct. Which phase of accounting the mandated from the Advent joint stock company, right? So emanated. Which phase of accounting is emanated means what? Give rise to the Advent joint stock of company. So stewardship accounting, cost accounting, management accounting or the financial accounting. Correct option is D, financial accounting. Why? See, when the stock company came into picture, people started purchasing the share. So to purchase the share, they should know about some company. So based on that, they are having the financial statement. They will look into the financial statement of company. They will decide whether invest or not, right? So that's why you can say the joint stock company give rise to the financial accounting. Which of the following is a concern with the preparation of accounting and controlling information in the form of assist management in the formulation of policy and the decision making? So see, preparation of accounting and controlling information in the form of assist management in formation of policy. So when we are talking about, we are assisting the management, right? So whether it is social responsibility accounting, standard accounting, inflation accounting or the management accounting. So we are preparing the MIS to assist the management is called as the management accounting. Which of the following is concerned with the application of costing principle, method and the technique for ascertaining the cost with the view to control them and ascertain the profitability and efficiency of the enterprises? So when we talk about the cost, right, so it is called as the cost cutting and increasing the profit of the enterprises. So which is this accounting? True value accounting, development accounting, cost accounting, management accounting. Correct option is C, cost accounting. To reduce the cost, increase the profit. Which of the following is the type of accounting that consider the social effect of a business decision in addition to the economic decision? So social effect is considered in which accounting? Very simple, social responsibility accounting itself. So first is correct. Option A is the correct answer. Social effect of a decision of a business is studied into the social responsibility accounting. Which of the following value is estimated price at which asset can be sold under current market condition? So which is that value? Realizable value, fair value, economic value or the true value? So current market condition means current value, right? It is also called as the fair value. It is called as the fair value, right? Fair value means what? Simply the value which is a market value. Option B is correct. So friends, here we will stop. We will continue our discussion into the next video. Meanwhile, you can subscribe us on the YouTube. You can join us on Telegram. For that, you can directly search Banker Zone CIB, Banker Zone JIB into the Telegram. However, you can download the application Bankers Zone JIB, which is available in the Play Store. Okay, don't forget to download the application Banker Zone JIB. Thank you, friends.